Traders, currently we are entering into week 8 of what seems to be the largest turnaround that we have seen so far throughout these interesting times dealing with the coronavirus. I want to talk to you guys a little bit about this pullback that we're seeing on the S&P, that we're seeing on the dollar, that we're seeing on the yen, and how potentially you can take advantage of this intermediate or long-term reversal. We'll talk about it. Let's roll the intro. All right, traders, we're looking at some interesting stuff here in markets. What's going on? By the way, my name is Cleveland Bishop, head trader here with Top Traders. I am noticing, as you all should be, that we just broke a high here on the S&P 500 after seeing a substantial turnaround here. I'll just show it up here real quick. We'll just head straight into the charts. I want you guys to take a look here at our S&P 500. All right, so if we pull it up there, and if I show you guys where we saw markets turning around, what I want you to notice is we're screaming to the upside right now, which is right around the 2800. We mentioned this price zone area here as a potential place where markets could rebound to. Take a look at this snippet that we recorded last week of this exact scenario playing out the way it is today. Take a look. Yeah, so right here I have a inverse fib drawn up on the S&P 500 from the high that was created here in February all the way down to our most recent low, and we have hit off on at 38.2 so far. So our job at the moment is to see how heavily retraced this potential sell side move can be. We've already retraced close to 40% of that entire downside. So in that time, we've had a couple of interesting things come out economically, and also some interesting things come about here in the actual chart. So you can see that we had a little turbulence here right around the 2600 level. We ended up pulling back a bit, right back down to the base here where markets originally sold off. Markets were able to hold, able to stabilize. We didn't have too many things come out that was negative that would incite markets to continue that sell side pull. Okay, just having more cases come about, US market just now open, just having more cases come about here in the US and in the global markets, that's not enough. Saying it's getting worse, you'd be surprised. That really wasn't the catalyst that we needed to trigger more sell side. And the contrary was true. You know, we're talking about potential cures coming out of India. You also see the New York pandemic actually slowing down a bit. This was all the reason that people needed to start buying here at the 2400 level. And then as you guys can see, that buying has continued, and we're now breaking back towards the high near this 50% retracement level. So one thing that me and Kyler here were talking about that is extremely interesting is in 2008, the market was infected, okay? Here in 2020, the market's been shot. There's a big difference. When the market was infected back in 2008, it was riddled and it was corrupt, and there were certain things happening inside of the market that to its core was insufficient and inefficient in a sense, right? Mispricing, lots of very strange behavior in regards to the entire real estate market, as you can understand. Here though, guys, you gotta understand, again, this market's been shot. All right, this market's been shot. This is a flesh wound. Okay, and so the interesting thing about that is, yes, that there's a case to be made that this catalyst could have incited the overall instability that this market was trading on. Remember what we always used to say, if we pull back here and head to the weekly, we always mention that, hey, this market is increasing on declining volume. That was something that was always very interesting to us here. What I want you guys to notice is the catalyst, the COVID catalyst, could have incited more calamities, more sell side, more stress on the economy, right? It's basically saying, hey, that gunshot could have turned into a bacterial infection. Okay, so it could have turned into something else, and that's something that, again, it's not bad to think in that capacity based off of some of the data here. So take a look here at the price and sales data, basically volume. You guys can see that we have been increasing. The market has been increasing on declining volume. This is something that we have always mentioned, and this is what I mentioned here in this video, why we think the recession is coming, which is exactly why we saw the massive pullback we saw. Already you have the S&P up 3%, by the way, today. So again, we see this massive sell side coming into markets at the moment, and All that means, guys, is that there aren't many market participants holding up these prices. Okay, there's more buying happening, but when buying is happening on less and less volume, what do you see happen? You see instability. Okay, so these are very inefficient markets, and that's why you can have such a substantial decline in prices, where you see markets go from 3,400 and sell back down all the way to the 22s. Right now we're trading at 27.35. Okay, so is this the end of the recession? Right? I mean, that's basically what, you know, we need to be talking about here. Is this pullback just, again, temporary? This is the same conversation we had. This is the same kind of coinage that I mentioned last week. Is this pullback temporary? All right, or is that flesh wound healing? Did we not get a bacterial infection? Okay, yes, the middle class sucks. At the end of the day, there are certain businesses that had to shut down based off of a simple flesh wound. Who knows? Maybe they're gonna realize that, damn, if I could have only lasted, you know, a market event that hurt markets for 120 days, let's say 4 months. If I could have only lasted throughout that time, maybe, you know, my business wouldn't have gone under. You know what I'm saying? Now, employees a little different. You're not in control of that potential situation, you know, technically. But at the end of the day, it sucks that there are certain businesses, business owners, and industries that have taken such a substantial hit that they've had to shutter their doors for companies that have existed now for, you know, 5, 6, 7, 8, 9, 10 years, just based off of one simple market event that, again, in my knowledge right now, is a flesh wound. Basically, again, is this the end? Well, in my assumption, as I mentioned before, we don't get a break of that low, guys, unless we have something that comes out that is more substantial than everything else that has already happened. Markets potentially overreacted here, okay? To have such a sharp decline, lots of fear, lots of asset recapitalization was going on. And so everything that we're seeing happening right now is, you know, basically just the result of, hey, markets overreacted. Any kind of real positive news is going to get markets to soar, which is why we're almost up 10% in the entire S&P 500 in just 2 days. If we close at 5% today, that's a 10% week in April here. Okay, so that's where we're at. Okay, we have to continue to monitor if the recession is something that we can truly take advantage of, or if this wasn't a recession. Everyone's using the word. Is this a recession? A recession basically is 2 consecutive quarters of downturn. Okay, here. Now, if you want to still take advantage of some of the assets and some of the prices that are still being affected by the recession, then you can take a look at some of the airline stocks. Okay, so some of the airline stocks, American Airlines, this is one, again, Kyler's been taking a real close look at. You guys can notice it's still trading at 11 bucks. Okay, right now we're nearing 27 bucks in terms of where markets are to sell off. Again, this is Thinkorswim, by the way. If you're not familiar with Thinkorswim, they're owned by TD Ameritrade. It's one of our favorite equity trading brokerages. We're also going to be talking about FX in just a second, guys. I mean, even if you're not in stocks, it's good to know what's happening in all markets, so that way you can correlate what's going on in the general markets. Okay, so you guys can see that American Airlines selling off massively. Let's go take a look at Delta. Delta as well. Again, if you guys see, Delta as well still holding those lows very, very significantly if it ever wants to pull up. So again, notice Delta, such a massive, massive decline from those highs. Is there anything truly wrong with Delta? Has Delta pulled back as significantly as the S&P 500? No, it has not. Which gets you to ask the question, well, what has pulled back that significantly? If the S&P 500 is trading so abruptly to the upside right now, what stocks are inciting that upside run? Well, you can go take a look at Amazon. You can go take a look at Facebook. It seems like the technology stocks are the ones that are leading the pack right now when it comes to this S&P 500 turning around. People think, and they should believe that technology is going to exist and they're going to exist here forever. So any kind of hit to those markets, you should start to see a turnaround. Here you go. You see the Facebook here. Facebook trading at a high of 224 bucks, trading all the way down as low as 144, and now we're trading back in the 170s. That's a pretty steep retracement back up, almost a 50% retracement from those highs. Okay, so again, we can also take a look at Amazon. You'll see that technology stocks right now are the ones leading the pack. So it seems like there's still an opportunity when it comes to your more physical brick and mortar organizations that took a hit. Airline companies have taken a massive hit. One thing that you probably want to be careful with that has taken quite an enormous hit is Carnival Cruises. This is also something that we've been taking a look at. Carnival Cruises trading right now at 12 bucks. It hit a low of $7. As you guys can see, we were trading as high as 50 bucks before the recession starts to hit. All right, so let's move over into Forex. If you guys want to continue talking a little bit more about equities, of course, head over into the recession room. Inside the recession room, we've been calling out a few positions already when it comes to FX positions, and I want to talk about those right now. All right, so a very interesting thing has happened. Boris Johnson is potential. I don't want to say very sick, but at the end of the day, he's in the ICU. All right, so here's a quick little screenshot. You guys can see that there's a headline out basically saying that Boris Johnson, in intensive care unit because of coronavirus-based symptoms, he did test positive. Now, the interesting thing about that is if I head over here and I want to show you guys the GBP actually did not take that massive of a hit with this news. Okay, we have pulled back a bit and we have slowed down the run to the upside. Maybe that's because of this Boris Johnson situation, but at the end of the day, it did not take a massive hit. Now, we did call out a GBP short position inside of the recession room. We'll be following up on what happens in that position, but we basically are betting on the idea that, hey, if anything a little bit more negative comes out about what's happening with Boris, maybe you'll start to see the pound go sell side. But outside of that, last week, you guys know I love to give you guys the idea of what's been happening in overall markets based off of our majors. Last week, we had some interesting stuff happen. Take a look at the Australian dollar. Australian dollar broke the high. We haven't seen the Australian dollar break this consolidated high all the way since March 16th. Okay, so boom, March 16th, we're seeing markets trade to the upside. Now, of course, strangely enough, the New Zealand dollar is lagging a bit, but you can also see the New Zealand dollar almost breaking the high. So again, guys, remember, who's the biggest trading partner for New Zealand and Australia? It's China. So if China gets a little bit better, you'll start to see New Zealand and you'll start to see Australia push back to the upside. So these are certain opportunities that we've been noticing and that we're actually in on right now. Again, so inside of the recession room, we're also looking at an NZD-CHF play, and that's something that we're really excited about. But of course, we need the recession to get a little bit better. So we're technically betting that, I mean, our money is on the side of the recession and this whole market event improving. Okay, we're in that stage already, and it's barely even the end of April. So again, yes, the media may show that the coronavirus is horrifically killing everyone, but if you look at where the money is flowing in the markets, people are betting that these things are getting better and better and better. Okay, here, let's take a quick look here at the NZD CHF just to see where we're at. We're still breaking the high. This was the first post I put out about the NZD CHF a week or so back. Here's a quick screenshot there. And it seems as if we've maintained this consolidation and we're now trading back to the upside. Interesting stuff. Okay, so let's see what happens here for the NZD CHF. If we go, sorry, I want to show you guys real quick what we're looking like as well on that dollar pulling back a bit. Of course, we saw the dollar explode in value when the coronavirus event started to happen. We subsequently did have a substantial pullback. Markets could not maintain the pandemic high. Dollar pulled back before the S&P 500. And then we had a little retracement back to the upside. Certain things were still adding up. That was slightly negative, but then boom, now we're pulling back on the dollar too. So guys, let's keep an eye out on all of things that we need to be paying attention to. We need to be paying attention to the New Zealand dollar. We need to be paying attention to right now to the Australian dollar as well. Those might be some of the best opportunities on the FX side. When it comes to the equity side, it seems like there's some amazing opportunities in airline stocks. And I want to take a look at gold real quick. A lot of you guys love looking at gold. So let's see what's happening on that end. GC. These are gold futures here. So right now, gold at 1690. That's quite impressive. We had a pretty decent sized sell-off, and then we had a pretty decent area of consolidation, and we broke that area of consolidation, let's say on the 10th. Interesting stuff. Okay, so guys, let's see what we get. If you guys are new to the channel, goodness, I'm doing this at the end of the video. Make sure you guys like the video. If this helps your trading and helps you get an overall idea of what's happening in markets, fantastic. Again, make sure you guys subscribe. We come out with this information very, very quickly, so you might need to turn your notification bell on. It's a little bell that will alert you anytime we put out some more content. All right, so let me know what you guys are doing in markets. I'm really excited to see if this is truly the end. Okay, and if again, everybody, it's so much hysteria has happened, but there are people that have made tremendous amounts of money, and so far we have a profitable P&L here throughout this entire market event. This is why we love trading fundamentals. This is why you guys need to be paying attention to fundamentals. at a very, very high clip. It's really important for you, okay? So let me know if you guys have any questions. Head over to recessionroom.com if you guys want to take advantage of these markets with us. We will talk to you guys in the room. See you later.